All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday morning, everybody. Today's October 11th, 2024. And the top story this morning is Tesla. And I just love to talk about this company because for years, Tesla stock, it just goes up and up and up. And talk about a hype train. Tesla has been the king of the hype train, AI notwithstanding, because Tesla was late to the AI game and then they just piled on. But if ever there's been a company that has just gotten by on the promise of something really awesome just over the crest of the next hill, I swear it's there. It's only a year or two away, and then a year or two goes by. It's still just a year or two away, over and over again. Rinse, repeat for the better part of almost 2 decades now, and people just keep buying it. Well, there was a little bit of a change in that yesterday. Tesla had their big RoboTaxi event, and I don't know if you guys noticed, it's a hard time for the auto industry right now, especially for electric vehicles. And well, Tesla's kind of the king of electric vehicles, so they need a new hype to latch onto. And for whatever reason, Elon Musk chose robotaxis. That was his big thing. He also chose AI and, oh yeah, Tesla's buying all these GPUs and just buy my stock. I swear I'm going to do something amazing with these GPUs one day. Eventually, I think, just buy my stock. Well, they unveiled their robotaxi yesterday and the market yawned. The market was not impressed. It was your typical Tesla event. It was heavy on promises. It was heavy on science fiction, and it was light on details. So let me give you at least a few of the details. They unveiled a 2-seater, very compact robotaxi, completely autonomous. No steering wheels, no pedals, no controls, no nothing. But also, as far as we know, it was just a shell of a car because it's not a functioning prototype. He just swears it's going to be ready by 2027. Trust me, somehow, because reasons. Also, somehow, I swear, because reasons, this thing is going to cost less than $30,000. Now, there are some new vehicles, and I mean some, you're talking like you're rolling your windows down like this, new vehicles out there for under $30,000, but they sure as heck aren't fully autonomous electric. I don't know how he's going to do that. Again, this is a very typical Musk-like thing where we swear it's going to be great and it's just over the horizon. And if you don't believe me, just ask my humanoid robot Optimus that he also unveiled at the same event. I'm looking this morning at what's trending on Twitter and everything. I see iRobot and Optimus is trending, and I'm like, oh my God, it's got to be Elon. Sure enough, it was Elon Musk. They also unveiled their autonomous humanoid robot. We're all going to have androids and 3POs in our house washing our dishes for us and then eventually rising up and overthrowing us in a horrible rebellion. And who could have seen this coming? Just take a chapter out of any generic sci-fi movie or show you've ever seen, and Elon Musk can build a company around it. That's pretty much what came out of it. He also swears they're going to have fully unsupervised, full self-driving available by next year. Keep in mind, guys, if you're a Tesla owner, when you hit that full self-drive feature that you pay a subscription for, yeah, it's mostly autonomous, but you've got some guy at some cubicle farm in some country somewhere that you've never met who's actually at the helm, who's actually going to intervene on your behalf to make sure your AI doesn't drive you off the side of the road. So it's basically just another version of the Mechanical Turk, a man hidden in the machine who's actually pulling the levers. Pay no attention to the man behind the curtain. Well, he swears that is going to be all fully autonomous, no human interventions or supervisions by next year. Again, light on details, lofty goals, very Elon Musky. So Tesla stock getting clobbered this morning on that news for a noticeable change. All of a sudden, Tesla investors want details. I don't know. Maybe this is a little bit of blowback because Elon Musk is kind of persona non grata on Wall Street these days, or certainly in Silicon Valley. You know, the whole Twitter thing. That didn't go over so well with his former base. So now he's trying to pivot to a different base now. Not working out so well for Tesla so far. The real winner in that Tesla story yesterday, believe it or not, was Uber. Shout out to my neighbor, Brian, called that one like a champ. Awesome call, Brian. Yeah, Uber stock is up big this morning. Why? Because Tesla's robotaxi is not going to put Uber out of business anytime soon. That's the market saying. Elon is kind of full of it on this topic. Also in the car business, we got Stellantis is down again this morning. It's a really rough time for the car industry, guys. They're changing their CEO next year. Stock's not doing so good, not enough to restore investor confidence, it appears. Also, we got big bank earnings came out. They were mixed. We got earnings from JP Morgan and Wells Fargo. Both stocks are up today. JP Morgan net income down slightly, earnings per share up slightly because of stock buybacks mostly. What else we got? Provisions for credit losses at JP Morgan were up big from a year ago, not so much sequentially, but more than double what they were a year ago. Also, we got a couple of typical Diamond Doom comments. You do a doomer proud, Jamie Dimon, with some of your geopolitical commentary this morning. Wells Fargo earnings were a beat. Their net interest income, though, that's a pretty important topic for a bank. Net interest income, the difference between what they pay out in interest and what they earn in interest on their loans, that was down 11% from a year ago, mainly due to higher funding costs and customer migration to higher yielding accounts. Guys, you're not hearing a lot about it, but when you see a big drop, double-digit decline in net interest income because of higher funding costs and customer migration, well, a bank run could be described as customer migration. That's one way to put it. It's certainly less alarmist language. I don't want to be accused of fudding too much here. I don't think there is a run on Wells Fargo happening. But higher funding costs means they're having to pay out higher deposits to keep their customers put, to keep them from moving their money elsewhere. And customer migrations means the money is leaving the bank. That's basically the same things that we heard about last spring in the March of 2023 banking crisis. So Wells Fargo's not fully out of the woods there. Big declines in net interest income there. And, this was before the Fed rate cuts. So it's not the Fed that's hurting the net interest income at Wells Fargo. It's customer migration, whatever you want to call that. BlackRock also reported today assets under management, $11.5 trillion as people continue to blindly dump their money into ETFs, bidding up the entire market as a whole, not stopping to ask questions at what they're buying. BlackRock now $11.5 trillion under management. The behemoth grows behemoth-er, bigger. I don't know what you say that. And last but not least, we got producer price index today, the inflation measure further upstream, what the producers are paying. And it was down, but it was down less than expected. Year over year, 1.8% headline. All right, that is much higher than the 1.6% that was expected, but it was down slightly from the 1.9% that we got last month. So producer prices are still going up, but they are going up slower than consumer prices. That means profit margins are getting squeezed. On a month-over-month basis, PPI was flat, 0.0%. That's versus a 0.1% expectation. So month-over-month inflation was actually a little lower. Year-over-year, it was a little higher. And that's also down from 0.2% last month. Now, most of that decline was driven by energy. And you can see it in core inflation. Core PPI was 2.8%. Whereas headline was 1.8%. What's the difference? Core takes out food and energy. That 2.8% core headline number, that's versus 2.7% expected and up rather sharply from 2.4% a month ago. So a big jump in core. Guys, this decline in inflation that we're seeing of the last few months, it's just oil. That's really all it is. On a month-over-month basis, it was 0.2% for core inflation. That is down slightly from 0.3% a month ago and in line with expectations. So inflation is down, but it's not down that much. Energy price declines are masking a rise in the cost of other things. And on the whole, that means profit margins are shrinking because consumer prices are rising slower. So we got quite a bit to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in the market, shall we? And don't forget that like button and that subscribe button if you're new here, because we do this every morning. So come have your coffee with the Melon Heads. And the S&P 500 is down 12 points, 0.21% here. Not a lot of movement pre-market. There was a little bit of volatility at 8:30 when PPI came out, but the market kind of shrugged that one off. The Dow, meanwhile, down 49 points or 0.12% lower. Likewise, we had a little bit of movement on PPI, but not that much. And the NASDAQ is down almost 0.4% here, 80 points to the downside for the NASDAQ. So we got stocks are down across the board like they were yesterday. Meanwhile, the U.S. dollar index, the Dixie, is modestly lower here, 5 basis points down at 102.94. The Dixie had a big surge yesterday, guys. Watch out for that stronger dollar. This thing has moved about 3% in the last week or so. Dollar's getting stronger here. Something to keep an eye on. That's putting downward pressure on asset prices. Looking over at the bond market now, we've got a mixed bag in yields. The long end is a little bit higher. The middle is a little bit lower. The 30-year Treasury, 4.413. That's up almost 3 basis points. The 10-year is at 4.104, up 1 point. The 2-year is at 3.968. That's down 3 points. And the 1 month is at 4.839. That's actually up 2 points. So not a lot of movement, but in all kinds of different directions in the bond market. Meanwhile, in commodities, we've got a little bit of green. We've got spot gold, 2,647. That's up $17 this morning, about 0.2% higher. Spot silver finally catching a bid here at 31.38. That's up 22 cents this morning, about 0.75% higher. Copper is up 0.5%. Platinum is up 1.1%. Palladium is up about 0.6%. And WTI crude is in negative territory again here, down about 0.75%, trading at 75.27 for November WTI futures. Still no word from the Israelis on what their plans are. It's now been over a week and still nothing. So does this mean they're having logistical challenges? Or does this mean there are more backroom negotiations that are going on? I don't know, but the world is still waiting on that retaliation, if any, I should say. Has it been long enough now that we can say if any? I don't know. Bitcoin, meanwhile, having a good morning here. $61,254 as priced on Coinbase. That's up almost $1,000 from yesterday. Now, Bitcoin had a rough day yesterday. We were down under 60,000, actually under 59,000 at one point on very little news. Seems to have recovered there and is now heading back up, but still in this band between the high 50s and the low 60s that we've been in for months. All right, let's talk Tesla, shall we? This is in CNBC this morning. Tesla shares drop 6% in pre-market after the Cybercab and RoboTaxi reveal fails to impress. There's a picture of this two-seater RoboTaxi that they're supposedly coming out with any day now. Trust me, shares of electric vehicle maker Tesla tumbled Friday after the company's long-awaited RoboTaxi event, where CEO Elon Musk unveiled the firm's Cybercab self-driving concept car, and it failed to impress investors. Tesla stock was down 5.9% as of 8:35 a.m. Eastern in pre-market trading. Musk revealed Tesla's Cybercab concept vehicle, a low silver two-seater. It has no steering wheels or pedals on Thursday night at the company's We Robot event, where it unveiled ambitions to create a fleet of autonomous vehicles and robots. The plan is for the car to be capable of driving itself autonomously at launch. Musk said the company hopes to be producing the Cybercab before 2027, but offered no details on where the cars will be manufactured. He said consumers would be able to buy a Tesla Cybercab for a price tag under $30,000. Things that are never going to happen for $1,000, please, Alex. Under $30,000 for a fully autonomous vehicles. Guys, you know I'm kind of a skeptic here, but I'll believe that when I see it. That is a pretty low price these days. You can't get much for under 30 grand in the new vehicle space these days. He also said he expects Tesla to have unsupervised full self-drive up and running in Texas and California next year in the company's Model 3 and Model Y electric vehicles. FSD, which stands for full self-driving, is Tesla's premium driver assistance system, available today in a supervised version for Tesla's electric vehicles, which means there's a person somewhere basically remote controlling your car, or at the very least supervising the algorithm that's controlling your car and then intervening if need be. So apparently they won't even need that supervision as soon as next year. Again, I'll believe that when I see it, guys. I'm very skeptical of this. Tesla also unveiling autonomous humanoid robots. These are not consumer products that are going to be ready anytime soon. And even if they are, nobody's going to be able to afford them. I don't know why they made such a big deal out of that Optimus robot, but they did. Tesla stock is paying the price for a lot of promises and very few details this morning, down 7%, $221.99, down over $16 this morning ahead of the opening bell. So Tesla's getting clobbered here. It's been a rough year for Tesla. The big winner at that event yesterday, believe it or not, was Uber. Uber and Lyft shares jump after Tesla's toothless RoboTaxi reveal. Toothless. That's interesting. Uber Technologies and Lyft climbed in early trading after Tesla's Elon Musk offered few details on the car maker's plans for a self-driving vehicle service that could compete with ride-hailing. Uber stock jumped as much as 5.4%, and Lyft was up 3.7% pre-market on Friday after Musk's unveiling of a robotaxi called Cybercab late Thursday in California. Tesla shares traded down as much as 7%. We consider the event a best-case outcome for Uber, said John something I can't pronounce, an equity analyst at Jefferies, with a buy rating on the stock. In a report referring to Tesla's taxi as toothless, he noted the company didn't provide verifiable evidence of progress toward automated driving features or quantify how many robotaxis it plans to make. Thursday had been viewed as a make or break night for Tesla shares, according to Mike O'Rourke, chief market strategist at Jones Trading. The event had already been delayed by 2 months, and Tesla was under pressure to justify its high valuation and prove it can lead the industry in autonomous vehicle technology. And look, guys, if you take away the robots and the sci-fi and the autonomous everything and the taxis, you're left with a car company specializing in electric vehicles. And electric vehicles is not where you want to be right now. That is a rough industry to be in. All the other automakers are down big on this news. So Uber basically saying, whew, that was close. Tesla is not going to put us out of business anytime soon. And look at Uber stock here, up almost 5%, trading at $81.41 pre-market. That's up $3.50. So a lot of Uber shareholders breathing a sigh of relief this morning. Again, congratulations to my neighbor Brian. Good call on that one. And also going on in the car industry, guys, Stellantis dips after CEO Carlos Tavares to retire in 2026. Not going to spend a lot of time on this one, but Stellantis has been in the news a lot lately, having trouble with their profit forecast being cut substantially, having trouble with the union. Now they're changing CEOs next year. And, well, the stock is not doing so well, down another 4.5% for Stellantis ahead of the opening bell, trading at $12.70. That's down almost 60 cents. Guys, this thing was trading at $29 in March, down more than 50% from its highs in March. So tough time for Tesla. Tough time for the auto industry all around here. Also going on this morning, JP Morgan. Let's talk about bank earnings here. JP Morgan net income falls as bank sets aside more money to cover potential bad loans. Pay attention, guys. Credit risk is out there. The consumers are tapped and they're running out of money. JP Morgan on Friday reported that net income fell 2% in the third quarter as the bank had to set aside more money to cover bad loans. Net income fell to $12.9 billion. That's down from $13.2 billion in the year-ago quarter. However, the New York Bank's earnings per share rose to $4.37 from $4.33 because there are fewer outstanding shares in the latest quarter. In other words, the only reason they beat their earnings per share is because of all the stock buybacks, reducing the number of shares outstanding. So they're creating the illusion of growth via buybacks. That $4.37 a share beat Wall Street analyst forecast, which called for a profit of $3.99 a share. JP Morgan set aside $3.1 billion to cover credit losses. That's up from $1.4 billion in the same period a year ago. So almost doubling their provisions for credit losses. That is noteworthy. Now, it's not up that much sequentially. They were just over $3 billion last quarter. So it's not like a huge jump. But if you compare it to a year ago, it is a pretty big jump. Total revenue billion, up from $40.7 billion a year ago. JP Morgan CEO Jamie Dimon said the bank continues to monitor geopolitical tensions that he called treacherous and getting worse. While Dimon didn't cite any specific conflicts, he has previously voiced concerns about the war in Ukraine and the growing tensions in the Middle East. There is significant human suffering, and the outcome of these situations could have far-reaching effect on both short-term economic outcomes and, more importantly, on the course of history, Dimon said in his statement. Look, Jamie Dimon is known for making somewhat alarmist predictions, as he's been doing for a couple of years. This one was no exception. JP Morgan stock is actually now down. It was up a couple of percent earlier. Now is down 0.25%, $212.27. We also got earnings from Wells Fargo this morning. Wells Fargo shares jump after earnings top Wall Street expectations. Wells Fargo on Friday reported third quarter earnings that exceeded expectations, causing its shares to rise. Adjusted earnings were $1.52 versus $1.28 expected. Revenue was $20.37 billion versus $20.42 billion expected. So we had adjusted EPS was a beat, emphasis on that adjusted part. Revenue, however, was a miss. Shares of the bank rose in pre-market trading after the results. The better-than-expected earnings came even with a sizable decline in net interest income, a key measure of what a bank makes on lending. And the net interest income is a big deal, guys. This is not some unimportant nuance in banks. This is how banks make money, the difference between what they pay and what they earn in interest. The San Francisco-based lender posted $11.69 billion in net interest income, marking an 11% decrease from the same quarter last year. That was less than the FactSet estimate of $11.9 billion. Wells said the decline was due to higher funding costs amid customer migration to higher yielding deposit products. That is the same crap that was killing the banks last year, guys. Higher funding costs. They're having to raise the interest that they pay due to customer migration. People are pulling their money out and putting it in the higher yielding investment or money markets or higher yield savings accounts. And that is putting a lot of pressure on this key metric for Wells Fargo. Also noteworthy, the bank set aside $1.07 billion as a provision for credit losses compared with $1.2 billion last year. So in the last year, JP Morgan has more than doubled their provisions for credit losses, while Wells Fargo has somewhat shrank their provisions for credit losses. This is how the banks play games in order to jimmy their earnings and make them say whatever they want. Look, JP Morgan and Wells Fargo, these banks are so freaking big that there's basically no difference. Macroeconomic trends take over once you get to scales this big. So the fact that one bank is doubling their provisions for credit losses while the other is shrinking them, that is highly sus. And it kind of makes you think about this adjusted earnings per share of $1.52 versus $1.28 expected. How much of that was just arbitrarily reducing their provisions for credit losses while the other big bank was increasing it dramatically? That's a little sus. Anyways, Wells Fargo covering up a decline in net interest income with an adjusted earnings beat. That stock is up 3.4%, almost 3.5% this morning, trading at $59.75. That is up about $2. We also got Berkshire Hathaway dumping Bank of America. They are now below that all-important 10% threshold. Keep an eye on that one, guys. We've been covering this. Warren Buffett has been dumping his Bank of America stock all year pretty much. They are now below that 10% threshold, which means we won't be hearing about this on a weekly basis anymore. We're only going to be hearing about it on a quarterly basis because they're no longer required to file timely updates with the SEC when they adjust their position because they no longer have a major stake in the company below 10%. So we're not going to hear about it anymore, but the world's most famous investor continues to dump stock and raise cash. But it's the best economy ever, and it's the best stock market ever. You know, just keep piling in while the CEOs take their money out, right? What's the worst thing that could happen? Bank of America stock is up about 1.2%, believe it or not, probably being driven more by those JPM and Wells Fargo earnings than the story about Warren Buffett here. And speaking of the CEOs are selling while retail piles in, BlackRock hits $11.5 trillion of assets with their private market push. People just keep dumping money, handing it over to BlackRock for them to manage for you. BlackRock pulled in a record $221 billion of total client cash last quarter, pushing the world's largest money manager to an all-time high of $11.5 trillion of assets as it seeks to become a one-stop shop for stocks, bonds, and increasingly private assets. Investors added $97 billion to exchange-traded funds and $63 billion to fixed income overall in the third quarter. New York-based BlackRock said on Friday in a statement, BlackRock has pulled in $360 billion of total net inflows so far this year, surpassing the full-year net flows of 2022 and 2023. So Larry Fink continues to control an increasingly large share of America's wealth. BlackRock stock is up 2.25%, $977. That's up almost $21 this morning. Now, let's talk inflation because we got producer prices just came in. All right, here is the headline year over year producer price index change. Prices went up for producers by 1.8%. All right, that is higher. The market was expecting 1.6%, but you'll notice it is down sequentially, down from 1.9% in August. So prices are still going up. They're going up a little bit slower than they were going up, but they're still going up a little bit faster than people are hoping for. There's a little bit of something for everybody in there, a lot like what we saw with CPI. But you can see here the trend of inflation. It was rising to start the year. People were worried about that second wave of inflation, and then it came down in the second half. So that's your year-over-year headline number. Now, on a month-over-month basis, there's some interesting language in here. Factory gate prices in the U.S. were unchanged in September from August of 2024, basically 0.0% month over month. Now, this is what the producers are paying. That's important. That's below the previous month's 0.2% uptick and lower than forecasts of a 0.1% rise. Prices for services increased 0.2% after rising 0.4% in August. That's led by a 3% increase in the cost for deposit services. That's interesting. The index for machinery and vehicle wholesaling, furniture retailing, desktop and portable device application software publishing, apparel wholesaling, and airline passenger services also rose. So there's a lot of categories. But the categories, almost every category went up except for a few others. Meanwhile, prices for goods were down 0.2%, led by a 5.6% drop in gasoline prices. Prices for diesel fuel, jet fuel, chicken eggs, and home heating oil and plastic resins and materials also fell. So look at the categories that fell: gasoline, diesel fuel, jet fuel, home heating oil, plastic resins. That's all oil, guys. I mean, chicken eggs were thrown in there. Prices for eggs went down a little bit this month. But guys, almost all of the declines in inflation that we're seeing in the categories that are going down, it's being driven by energy. If you take away the energy, well, you're left with an inflation situation that actually looks a little bit worse. And you see that in this chart here. This is PPI when you strip out food and energy. This is core PPI. And we actually saw a big jump in core inflation. We went from 2.4% last month up to 2.8%. Don't expect to see a lot of this in the financial press, where they're all talking about the soft landing and how the Fed needs to keep cutting and keep printing money, keep juicing asset prices higher. Inflation is defeated and vanquished. And that ridiculous article in MarketWatch yesterday that said the price of food is down since the pre-pandemic. If you do some fancy math with some BS government statistics about wages, all of a sudden food is magically cheaper for everybody. Talk about gaslighting. But look at what's going on in core PPI here, guys. Does this look like inflation is coming down to you? It doesn't to me. Really, what it looks like is energy prices are heading lower despite World War III breaking out in the Middle East. And if you take that away, you're left with inflation that's actually getting worse, according to PPI here. A big jump, 2.8% year over year PPI inflation when you strip out food and energy. Much higher than the 2.4% we had last month and higher than the 2.7% the market was expecting. And last but not least, on a month-over-month basis, it looks a little more stable. Here's your core PPI month-over-month, 0.2%. That is in line with expectations and down slightly from the 0.3% we had in August. So, I mean, different ways you could look at the PPI inflation, right? It's still coming down, so that's optimistic. But then when you dig deeper, you're like, yeah, but it was all oil. And if you take away the oil, prices went back up and they went up faster. Again, it kind of depends on your pre-existing biases where you're going to land on that one. And I just want to say thank you so much to Mr. Uncle Fedster. Thank you, Uncle Fedster, for the super chat, for supporting the channel, sir. You are a gentleman and a scholar. He says, happy Friday, Jack. The safety considerations and complexities of self-driving software have to be huge. I don't see a release for some time. I agree. Safety is a big deal. Now, look, I live in Pennsylvania and I come from New Jersey. I haven't encountered some pretty bad aggressive drivers in my day, between living in a tourist trap and people who think the turning lane is to slow down and look at the pretty houses lane, and guys who just won't get over. If you're not going to pass, keep to the right. So there are some things that I think, hey, maybe full self-drive is a great idea. And maybe all those idiots that are out there making bad decisions on the road, causing car accidents that need to be cleaned up day in and day out, maybe the autonomous vehicles are going to be even better. And then I think about what AI is doing, how it's hallucinating, how it's telling people glue pizzas together and jump off of bridges, and it can't count the R's in strawberries and all these other problems. And the people who are producing that and saying it's going to be 10,000 times smarter than people by the end of next month are the same people who are telling us, don't worry, my cars are going to drive themselves. that doesn't inspire a lot of confidence. So I agree with you, Uncle Fetzer. I think safety is going to be a huge consideration. Sensors go bad, and when sensors go bad, these cars just like drive themselves off the side of the road. Right now, there are people remotely who intervene when that kind of stuff happens, supposedly, and it's supposed to be minimizing it. I have trust issues, so I think I'm going to be a little hesitant to adopt full self-driving. I would much rather live with the consequences of my own mistakes than the consequences of somebody else's mistakes. That's just how I roll. So I share this sentiment, and I'm very skeptical. Elon Musk has a reputation of making promises and then failing to deliver on them. So what's he promises now? A fully autonomous RoboTaxi by the end of next year for less than $30,000. No freaking chance. Sorry. No freaking chance. And then he's also got his Optimus Prime robot that he's got unveiling. Good luck with that one. I remain skeptical. Thank you, Uncle Fedster, for the super chat and the support of the channel, sir. And thank you as well to Mr. JJ Watt. Thank you, JJ. He says, should the longshoremen returning to work be counted in the next jobs report as jobs added, asking for a friend at the BLS? Look, I'm not really sure if this is sarcastic or not. I'm picking up a little sarcasm. Maybe my sarcasm detector is a little out of cal here. We'll take a look at that. We'll flick the needle, see if it changes there. No, it shouldn't. The strike didn't go on long enough. It should not show up at all in the BLS numbers. Now, that being said, I don't know if the Boeing strike is going to show up. We're going on a month now. Now, I don't think the Boeing guys are out there collecting unemployment benefits or anything like that. I could be wrong. I don't think they're going to show up in the jobless numbers or as jobs created. So my initial reaction to your not sure if it's sarcastic or not comment is no, it shouldn't change anything. If anything, the Boeing strike will affect the jobs numbers long before the longshoreman strike does. But just besides the fact, guys, of what the numbers do day in and day out, keep in mind what's going on here. We're being told about tightness in the labor market, but it's weakening a little bit, all right? Look at what we're seeing here. Longshoremen on strike en masse. Okay, yeah, for political reasons or whatever, they delayed it. You've also got the Boeing guys on strike. You've also got the UAW threatening to go back on strike. You had the big UAW strike last year, the UPS driver strike last year, the airline pilots strikes last year. All these big organized labor disputes that are going on right now. Why is that? It's happening because the cost of living has risen so much faster than wages have. All right. So remember that if we were really in this happy-go-lucky unicorns and rainbows economy where inflation is defeated and wages are rising and my economic plan is working, why is everybody going on strike? All right. And by the way, unions making, I don't want to get too political here, guys, but the way the union endorses or doesn't endorse and who they endorse, it's changing. All right. There has been a noticeable shift in organized labor and their political operations and political statements and endorsements in the last few years. The labor market is in flux right now. It is not strong. It is not tight. All these guys are going on strike because they're not being paid enough, because the price of labor hasn't gone up enough. That kind of thing doesn't happen in a tight labor market. All of these strikes, in my opinion, are just further proof that the labor market was never really as strong as they were telling us. That's my takeaway from all that. Maybe that was a very long tangential answer. We kind of spun off a little bit from the not sure if it was sarcasm or not comment from JJ, but thank you, JJ. I appreciate the super chat and the support of the channel, sir. And thank you to all of you wonderful melon heads for having your coffee with us this morning. I appreciate that very much. Thank you guys for the super chats and the generosity in supporting the channel, as well as you magnanimous melon heads on Patreon and YouTube memberships. Thank you guys for everything you do. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. We'll be back this afternoon for the live stream at 3:15 p.m. Eastern time, guys. Until next time, live small and dream big.